If you've ever dealt with your company's workers' compensation insurance, you've undoubtedly heard the term Experience Modification Factor, and that's the subject of this clip. What is an Experience Modification Factor, or EMOD, or EMF? What is an Experience Modification Factor? It's a mechanism by which an employer's premium is adjusted based on that employer's individual loss experience. Simply put, the Experience Modification Factor is the ratio of your actual losses divided by your expected losses. So an average employer is one whose actual losses equal their expected losses, and it's expressed as a term of 1.00. If your individual loss experience is better than average, you will have a credit mod, or a factor less than 1.00. For example, 0.75 would be a 25% credit to your premium. Conversely, if your loss experience is worse than average, you will pay a debit mod, or a factor over 1.00. It's not all that simple, however. So actuaries, in an effort to justify their existence, have come up with a very complex formula that incorporates over 168 calculations in finally determining an Experience Modification Factor. Typical errors we see will be duplicated claims, improper claim amounts, missing payroll information, claims that aren't discounted by 70% for medical-only claims. So what does all this mean for you as the employer? Well, number one, call your insurance agent and have him or her explain to you in detail the components of the Experience Modification Worksheet. Number two, if there are any errors, request changes. You can go back 3 years to have those changes corrected. And number three, make certain you meet with your insurance company at least 6 months prior to your next renewal. Go over all your claims, because that is when the data is submitted to the company that promulgates the rates. And if you have any other questions, please call us at Beehive Insurance, the Mod Squad. And cut.